A pleasant morning to each and everyone, my dear students. Welcome to our subject. Now let us go to the review on basic concepts of accounting. And our lesson for this day is all about adjusting entries. And these are the different learning objectives. Number one, enumerate the common end of period adjustments. Number two, prepare adjusting entries. So how do we define adjusting entries? Adjusting entries are entries made prior to the preparation of financial statements to update certain accounts so that they reflect correct balances as of the designated time. So as you can see from the definition po, naka-bold po ang word na update. So para ma-update po ang tamang account balances po ng different accounts. What are the purposes of adjusting entries? Number one, to take up unrecorded income and expense of the period. Number two, to split mixed accounts into their real and nominal elements. So how do we define real, nominal, and mixed accounts? Another term for real accounts are permanent accounts, accounts that are not closed at the end of the accounting period. These accounts include all balance sheet accounts except the owner's drawings account. Another name for permanent accounts, balance sheet accounts. Now let's go to nominal accounts. Another name for nominal accounts, temporary accounts. Accounts that are closed at the end of the accounting period. These accounts include all income statement accounts, drawing account, clearing accounts, and suspense accounts. Now let's go to mixed accounts, accounts that have both real and nominal account components. These accounts are subject to adjustment. So as you can see on the diagram, mixed account should be adjusted for us to separate the real and nominal account. Methods of initial recording of income, it can be liability method, it can be income method. Under this method, what I mean the liability method, cash receipts from items of income are initially credited to a liability account. So debit cash, credit the liability account. For example, debit cash, credit unearned income. At the end of the period, the earned portion is recognized as income. Kapag naipon na guys, you need to record that as income while the unearned portion remains as liability. Under the income method, cash receipts from items of income are initially credited to an income account. At the end of the period, the unearned portion is recognized as liability while the earned portion remains as income. So you need to record as liability yung hindi mo pa po na earned. Now let's go to the methods of initial recording of expenses. It can be through asset method and it can be through expense method. Under the asset method, cash disbursements for items of expenses are initially debited to an asset account. So like for example, debit, prepaid expenses, credit, cash. At the end of the period, the incurred portion used up or expired is recognized as expense. So absolutely, you need to recognize that as expense para hindi po ma-overstated ang ating asset and understated naman po ang expense account po. Under the expense method naman, cash disbursements for items of expenses are initially debited to an expense account. At the end of the period, the unused portion not yet incurred or unexpired is recognized as an asset while the incurred portion remains as expense po. So you need to record that as an asset pag hindi pa nagamit guys. Yung nagamit po should be recorded as expense account. So if you have any question or any comment with our lesson, you can just put your inquiry sa baba po or comment sa baba po for me to evaluate and for me also to answer all your inquiries, guys. Then afterwards, I will send to you the different activities through the G-form, through the Google Classroom, or through your email, guys. So I hope you've learned something about our lesson for this day. So that ends our lesson po. Thank you again for coming, for participating, and listening to our discussion for this day po. Thank you and God bless you.